morning, everyone, and welcome to another edition of TechCabal Live. Thank you for joining us today. With us today is Tokunboh Ishmael. She is the managing partner at Alitheia Capital and Alitheia IDF, which is a second fund that they just closed fairly recently. She's been an investor for more years than over 20 years across investment banking, private equity investing, technology, new business development, both on and off the continent. She's a director at the Africa Venture Capital Association. She's been a director at the African Venture Capital Association, Pragmatic Capital, Orios Capital. I mean, just really, really robust sort of investment background. So welcome to Tokunboh. Great to have you.
Great to be here. Thank you.
Excellent. So thank you for joining us, and looking forward to an interesting conversation all in all.
Great.
So I would love to talk a little bit about sort of your personal journey before we actually even get into all of it. Just your personal journey as an investor. You've been investing for over 20 years, and you've gone through energy into technology. You're doing agro, just a pretty broad sense. So I mean, if you could talk a little bit about sort of your journey as an investor and the way it's personally had you thinking, the experiences you've had, and how it's had you thinking about sort of investing in Africa as a whole, just from a personal perspective.
So I'll focus on my journey of investing in Africa, which started way back in the early 2000s or so, early noughties, as they say. When I moved to Nigeria, having worked in the US and the UK, I moved to Nigeria to join Orios Capital, sheer breadth of the problem in terms of being able to reach the population that really needed access to these financial services. I knew that technology had to play a role. And that's where I began my foray into investing in companies like Paga and Alitheia, which are now commonly known as fintech companies. But back then, the term financial technology was not primarily the types of companies that Paga and Alitheia represent today.
Yeah. Okay. So I think that's a good sort of segue into Alitheia's sort of overall sort of thesis, which is what I'd like you to sort of expound on a bit. I like the idea of sort of Paga and Alitheia as being focused on the man on the street. And definitely, I mean, especially Paga talk about their reach and the impacts that they have on sort of the small business owners that work with them. Well, if you could talk a little bit about, you know, what's your investment thesis regarding these companies and broadly as a fund? How do you think about these things changing the landscape for people? What kind of impact are you looking to have? And I think importantly, what kind of returns are you looking to have from these kinds of investments?
Well, you know, finance makes the world go round. You know, typically in the West, right, you are able to leverage your earnings or your earning capacity to have better access to products and services, or more fuel for your company to grow. And that's what really helps, you know, many of the companies in developed economies. That's access to finance that they can leverage to expand their businesses. Back when we started investing in this space around financial services as an essential service, and even still today, small businesses have a hard time securing the finance they need to grow. Banks deem them too small to provide the financing that they need, the loans, and oftentimes they're looking for certain types of loan collateral that these small and growing businesses don't have. And oftentimes they're too big for the microfinance banks, so they're called the missing middle. So we wanted to address that issue by making it possible and easier, more affordable and more accessible for small and growing businesses to have access to finance but also the trickle down to their customers, the low-income households or the regular man on the street, to also make it possible for them to have a means for them to save and have access to financial services that can help them improve their lives. So that's what I mean about these companies touching their lives. And Paga, when Paga started some 12, 13 years ago now, there was no easy means to just be at home and transfer money from one person to the other, not to talk of being able to pay your bills. If you couldn't pay bills, and I think during this lockdown, we've seen how much of an essential service financial services is, and the ability to be able to do that over digital means remotely. You couldn't do that, and for some people, they might not even be able to cast their minds back to that period when you couldn't do that then, which meant that if you did not have a means of handling cash or being present to make a payment or do a transaction, typically over the weekend, if you hadn't taken out bundles of cash on a Friday, you were stuck.
I don't miss those days.
Yes, exactly. When Paga came on the scene, poof, you could transact. You didn't have to plan every second of your life about the money that you needed. And it's companies like Paga that have made it possible for us to make that transition. And that's helping the everyday man on the street to live their life fuller. Likewise, a company like Lydia is making it possible for someone in the middle of a market who has a big retail shop, who has cash constraint needs because they've supplied their products on credit, and they've got huge receivables, but very healthy receivables, but they need cash to buy the next lot of inventory. They can be in their shop right there, and Lydia can use alternative credit scoring means from what the banks use to determine that, hey, this small business is good credit. They're very likely to pay, and that's using technology to determine your credit scores, and because you're using technology, you can use alternative credit metrics beyond just your finance or the collateral that you have, real estate or what have you.
Gotcha. Let me ask about returns. So Paga is about 11 years old now. I'm trying to get exactly what year it is you invested in them, but exits
from the
are
beginning.
From the very beginning. Yes, I know you were
from the beginning.
So, I mean, the conversations about exits now, we're starting to see things, that are interesting. MFS, the other one we saw, Bionics, who we're going to speak with. How are you thinking about that? And, sort of, were investors expecting this to have blown, your LPs expecting this? Just talk to me about exits.
Well, the first thing I'll say is I'm proud to say that MFS is also in our portfolio out of our South Africa office. So we're very proud of what our partners in South Africa have been able to do with MFS. It's part of our basket. We're in touch with them. So our investors are happy. There's a good balance. But even with MFS or Paga or Lydia, the fact is it takes time to cook a good meal. Yeah. Right. And we could have
more time here.
I think we can come on to that actually. Sometimes it takes longer in our markets. And we could have exited. And some investors that came in after us in companies like Paga have exited. But we have a responsibility on a number of levels. Okay. And that's not just a responsibility to our investors. It's also a responsibility to our portfolio companies to see how we can support them to the best of our abilities. We're not just in there to just get a quick in and out to make a cash multiple. We definitely want to do that. But if we need to put more money in to support them longer, and that's what we've done. We've topped up our investments in Paga, then we will do that. So it's a mixed bag, and we're there to support. And we also have a sense of responsibility to the ordinary man, the ordinary folk, that the reason we invest in these companies is because we're trying to make life easier for the ordinary man on the street and these small and growing businesses. So supporting that platform that enables them to transact, to save, to secure financing for their business is important to us. So we have a responsibility to our investors, and that's why we choose our investments carefully and work hard, not just put in finance, but also put in good effort and support, business support, strategy, business development, access to our network and talent into the company, so that, you know, where Paga was when we invested is not where it is today. And it makes us smile where it is today. So there's a responsibility to investors, the portfolio companies, and to the end beneficiaries.
So, and just to be clear, I mean, obviously super important companies that you've invested in, pioneers in a lot of ways, huge impact. But I did mention that a lot of the a place I do want to spend a bit of time with is LP thinking. The way sort of the investors in these funds are thinking about their capital, thinking about returns. How are they allocating it? What are they comfortable with? So, I mean, I'm going to ask you, you know, are you time bound? You know, do you have to exit after 5 years, after 7 years? How do you manage that with investors? You know, like, do you have to go back and say, well, we're staying in this one, but we're exiting these other ones? I know these are the conversations.
So the typical lifetime of the funds that we have is 10 years. And there are options to extend on those 10 years in some cases. And we have done that in the past. When we go into a business, yes, we want to be out within the sort of core investment and disinvestment phase of the fund. Sometimes it doesn't work like that, and you do ask for an extension. The good news is that the kinds of investors that we have are investors that are aligned with the kind of purpose that we have, which is to make it possible for the everyday man on the street, you know, ordinary folk, to reach their full potential by having access to essential goods and services. So most of our investors are development finance institutions, which is a good thing for us in terms of our focus, but also even at a time like this, where the gap of investment in essential services has become even more glaring, our investors are aligned with our strategy and are pushing us, you know, supporting us along the way that, yes, your strategy still makes sense.
Fantastic. Okay, so just sticking with that, and I know you do a lot of work with Goodwill Investments and those kind of LPs. Someone's asked.
Goodwill Investments is our partner, actually. We're partners we're co-managers in the same fund. Okay. So we invest together. We're partners. We work on our investments together. So that's why MFS is in our portfolio, the same portfolio. Yeah.
Okay, fair enough. Someone's asked, and usually I wait until the Q&A section to ask the questions, but Newbie K's asked, is 10 years considered patient capital?
In short answer, yes. And in our market, double yes. Because access to money beyond 2-3 years in our markets is
at 25% per annum.
And our money is not at 25%. We're not there. We're investing in equity. We're partnering with founders to help them grow their businesses.
Gotcha. Okay. All right. So let's talk a little bit about the second fund. So the Alitheia IDF. So $75 million. It closed earlier this year. Congratulations. Gender focus. Talk to us a little bit about the thinking behind that and what you're looking to accomplish with that particular fund.
Yeah. So the first thing I'll say is that when we look across Africa, again, we're all about how do people reach their full potential. For us, Africa can only reach its full potential when it leverages all of its assets, human assets, you know, commodity assets, whatever resources. what we find is that the half of the population, almost half, I'd say, who are women are not fully leveraged in terms of their skills and abilities. We have over 50% of small businesses are owned by women. Only about 2% of those get formal funding. We believe that that's a hindrance in Africa reaching its potential, because those businesses need to grow. We already know that small and growing businesses are the engine of growth in Africa. But also beyond that, if you look at the boardrooms and management teams in Africa, they can be overwhelmingly male. And when you have too homogeneous board or a management team, you're not having that company firing on all cylinders. McKinsey has shown that in its research that companies with diverse boards and management teams are able to outperform their peers by at least 20%. So those companies are leaving money on the table and they're doing Africa a disservice. Then when we come to the the employees, you need a diverse employee base. And whether it's at the board or at management or within the employee base, you want better corporate governance, you want better decision making, which doesn't just rely on groupthink of one homogeneous type of employee, board member, or management, and you want better innovation. And so where you have better in all these things, you have companies that perform better, they create better products and services. And so we as Alitheia IDF, with our gender smart strategy, we are looking for all those businesses that along their whole value chain, along their production line, along their development of products and services, where women are impacted and where we can improve the ability of those companies to perform by having that diversity I've spoken about, and by having the better corporate governance, decision making, and enhanced innovation that comes about because you have people on the team who are thinking about products beyond one homogeneous group. And I'm a sports person. Unfortunately, Garmin had this huge tech issue this past weekend. So Garmin is what I use to record. I swim, bike, and run, okay. Which I'm a triathlete. Yeah. And you know what? Recently, probably in the last 18 months, Garmin introduced into its tracker the ability for women to track parts of their monthly cycle, to track symptoms. And you know what? That's innovation. That endears Garmin to a broader group of people. And it's those kinds of innovation that you want for everybody to reach greater heights in their potential.
Okay.
And I can even talk about car seats as well, which is one of my favorite ones. That, you know, when car seats were introduced in the 60s, it was just for one kind of dummy, the male body. Car seats have been improved by people thinking about the female body as well. So that's better innovation. And we can sit and talk about so many different cases where products are improved because you begin to look more about the diversity of the customer base. And then to top that up, women are the key decision makers in homes for purchases. And the statistic is that women globally control about $15 billion in decision making for house purchases and purchases for the home and general consumer purchases. How would you not then leverage the thoughts, the tastes and preferences of those women to create better products? So we are looking for firms that think in a diverse perspective. That doesn't mean that we don't back male founders. We do.
Okay.
We want to see how their products and services can be improved by the diversity in the board and the team, the management level, but also how their products can reach and improve the lives of women, whether that's for better healthcare, better education, etc.
So, I mean, talk to me about finding, are there a ton of companies for you to invest, with primarily female leadership or with like strong female leadership, strong female presence on the board before you come in? I mean, how is sourcing deal flow for this? Is it easy? Is it challenging? Or are they just starved for capital and waiting for you and they were all waiting for this
So the first
fund?
thing is that we are inundated with opportunities and our task, right? What I found is that the female founders are often still trying to grasp what this whole, equity investment is about, or they haven't quite thought through the greater scale of their business, because you know what, it's okay, it's growing, it's providing the needs. I don't want to take somebody's money and then be beholden. So educating and helping them develop their business thesis beyond what they had originally thought is a big part of what I find that we do with some of our female founders. A good part of our female founders also have the same business schools or universities as the male founders, but they have suffered from an unconscious bias and have not received the funding that they, in some cases, when I see them, I'm like, you should have gotten funding a while back. And so, and we understand that.
You're finding opportunities that people have let go,
Yes, we believe and we know that people leave money on the other investors leave money on the table where we're able to create those transactions, and we're also able to empathize with those founders that have gone through that kind of bias and help them think through how better to present their opportunities and overcome those biases.
Interesting. That's really fascinating. I want to ask you about that. All along your career, sort of what led you to create a fund like this? What are the experiences that you've had as an investor, as a member of boards, that kind of led you to this point?
Well, the first thing is that, like I said, I saw that money was being left on the table. Not my colleagues in the private equity industry are not immediately going to think about an opportunity of a factory that creates sanitary towels. But that's in my purview. I see the market for that. I know the market for that, right? So when somebody comes to me with that kind of opportunity, I'm like, yeah, get it. At the other end of the spectrum, if somebody comes to me with an opportunity of amazing beauty and cosmetics products, I can get it too. I embrace it. I know it. I can very quickly see the market on that. And that's not to say that my colleagues, if they push further, wouldn't get that, but I see it quicker. And I'm able to also proactively go after those opportunities because I'm like, hey, where are we spending our money? As women, what are the things that we're lacking? And so, I saw that money was being left on the table. But then digging further, why is money being left on the table? Well, there's a bit of unconscious bias. So how can we overcome that, and how can we turn these opportunities around?
Something you mentioned that I want to get a bit more into. You mentioned creating your own transactions, helping people sort of shape the opportunities that they see. Is that common? Is that common? How hard is that? Getting people to basically, and is it different here versus the West in terms of companies? Getting people to see, to create investment-ready companies, or to create sort of companies with big enough visions for them to be worthy of investment. Is that a process? What percentage of your portfolio would you say you have to do that for versus what percentage is, they're ready and you're just, doing your due diligence and putting the cash in and then supporting them?
Yeah, the first thing I'll say is by the time you by the time investments come to you ready cooked or everything's the easy ones,
Yeah.
you can be guaranteed that there's so many other people at the table, right? So, and then oftentimes you have auctions, there's a bit of craziness that's going on. I prefer to limit those scenarios, and try and go on the road less traveled, and seek out proactively if I see a sector that I think, okay, you know what, this is what we should be doing more of in this sector. I want to go down that path. Or if I come across someone who the other day I was watching a program, I saw a really good entrepreneur on there, and I wondered why her brand wasn't more prolific. And so I sought her out and said, what's going on? What are your plans? Tell me how do you want to grow this business? And she wasn't necessarily on the fundraising path at that moment. It's like, oh, you know what? I could do this. Yeah, I could be doing more in this particular area. So yes, I would like to see how we can partner and you can make an investment. So I prefer those kinds because you're not starting off trying to fight for the seat at the table.
$1 billion valuation and $1 million of income.
Which is good. Hey, those high valuations are great for founders, right? So I don't want to begrudge that, but I don't want to get into, some if that's what they're worth, that's what they're worth. But I don't want to be in a competition that sort of puts a lot of air into something that doesn't need to be at that level.
Okay. I mean, that's fair. So, I mean, let's talk beyond tech. So talking about your investment beyond tech, beyond women, which we've just been talking about, some of the rest of your investment philosophy. I know you've done agribusiness is a big focus, particularly of Alitheia IDF. Talk to me about that. Tomato Joss, obviously very well-known sort of company, doing really interesting things with farmers. How do you think about agribusiness? Where are the opportunities there from the way you see it? What's the work to be done?
First thing is that agribusiness touches all of us. We all need to eat. And there are food security challenges in our market, food spoilage issues, logistic gaps that result in food security challenges. So it's an area that we realize and know that there's a lot to be done there. Secondly, it's a sector where there's a preponderance of female participation. So it's a big reason why agribusiness is an area that is close to our hearts and that we want to see how we can improve the sector, the value chain, and the plights of smallholder farmers who are overwhelmingly female. And so making an investment in a great company like Tomato Joss, which is, not only doing all those things that I mentioned, but also provides an import substitution case. I mean, in Nigeria alone, the use of tomatoes, I mean, we eat probably, I'd say 90% of the population eats tomato-based diet every day.
Yeah.
There's in our stew, in our jollof, whatever. So, there's a huge market for it. And we import a good portion of the tomato paste that we use. So that import substitution for us is, tick winning in terms of growing a scalable business. So from the founder, from the sector and the challenges it addresses, to the founder, who's female, dynamic woman who's doing amazing things, to the company, the import substitution, to the producers in the value chain, the small scale holder farmers, and the ability for those farmers who are, again, I said, are overwhelmingly female, to improve their income due to better support from Tomato Joss, and therefore, improving their yields and therefore their incomes. For us, it's like tick, tick, tick. So yeah, that's that's the thesis for us around the agribusiness case, those kinds of companies.
So what else are you seeing that you're excited about? If you're like, what's an opportunity that you're like, if somebody brings this to me tomorrow, I am throwing big checks at them.
Yeah. So for me, just sort of coming back a bit to tech, I think we need to move in the tech space to more of an innovation that's bringing together the various bits of innovation, the nexus of tech in traditional industries, manufacturing. We're seeing it in agriculture with some of the ag tech plays. We're seeing it in education with some of the ed tech plays. We need to see more within manufacturing and actual creation of products. I saw something in the healthcare space that I'm quite excited about, a device, low-cost device for that can help with checking on ailments and some of the ailments that are coming out of the COVID crisis, actual construction of health tech devices. So that's in the healthcare space.
We don't do a lot of hardware work here.
We don't. We need more of that. Affordable mobile types as opposed to the traditional large imaging screen devices and sort of like whole room devices that take up a whole room. We need palm held devices now that can help with
it's a notoriously
diagnose. It's a notoriously tough space, but the nexus with the mobile phone and things that you can do with even oximeters on phones and different checks, that I think has got to be an interesting space. The nexus with finance in everyday life, Max NG is one of our investments as well. So where finance is playing a role to improve the logistics chain and logistics. Again, the crisis has shown that logistics and transportation, particularly for transportation of goods and the support for e-commerce, crucial. So the nexus of finance and tech in logistics, we need to be seeing more of that. And so we're quite proud of what Max NG is doing and how it pivoted given its initial crisis with the removal of its license, and how it was that pivot enabled it to be ready for the crisis, for the COVID crisis. So those kinds of innovation, where general purpose innovation that can go into traditional industries, we need to see more of that. We need to see more of that in everyday life. And I'm seeing those kinds of opportunities come to the fore. So I'm excited about that.
Okay, I'm going to jump into that. And you've teed up Max now, so we're going to have that conversation about regulation and, regulation and risk. How do you even balance that? You're putting money into a market, the regulation is uncertain, it changes without, in very unpredictable ways. Potentially company-ending ways or business-ending ways. How do you account for that risk? I'm going to bring it back to the LP question. Are they comfortable with investing in these markets, knowing that you have that kind of regulatory risk? What was the reaction in November, when this was coming out? Are you having emergency meetings entirely through that period? What are you hearing?
So the first thing is that the investment thesis did not rely solely on
consumer transport.
Being on consumer transport.
Okay.
There were other elements. And so what the crisis did was it accelerated plans, just like the crisis has accelerated everybody knowing who Zoom and House Party, what I know, well, but at the beginning, House Party was very slow. It was very slow to pivot. It had I could have a whole other dialogue about that. But without House Party and the challenges that threw up, people wouldn't have started looking for Zoom, the general populace. So, but it accelerated people knowing who these are. It accelerated individuals and businesses teching up,
Yeah.
getting that infrastructure, and it accelerated the businesses that were servicing them becoming more robust. So those plans,
regulatory risk.
yeah, coming back to Max, yeah. So we didn't invest on just that thesis alone on consumer transport. So it was an acceleration. Yes, there were, I mean, for about a week, there were like constant meetings. Okay, so what is the plan? What's the short-term plan, medium-term plan, long-term plan? And it brings me back to having those meetings and engaging with the founders really highlighted for me again a key thing that we do when we're looking for investments: management. Their track record, their adaptability, their flexibility, their dynamism. I mean, Max founders tick on all of those. They were very quick. They were not coming with problems, they were coming with solutions. We had a discussion, this is what we're planning to do. That, you know, by the time you're saying, have you thought of this? Yes, and here is what we are planning to do in that area. So, but addressing regulatory risk.
Yeah.
And I said all of that to be able to say what I want to say now. In addressing regulatory risk, you can't go into a business with just one premise.
Yeah.
You know, and you need to be, when we're looking at businesses, we are doing a risk assessment. Mm-hmm. And more often than not, regulatory risk is high up on that list. And it is a problem, but the first step is to engage with dialogue. Obviously, that didn't work in the Max case, but they were able to pivot because there were already plans beyond that sole activity that suffered.
So I hear that. I guess the thing, and the question I have is around, so we speak to a lot of investors. We speak to investors in the PE space, the VC space, and I hear investors talk about, like, you know, entrepreneurs think raising money is hard until they have to, you know, like, let them come and try raising a fund. And so I have heard every conversation from investors about sort of going to defend investing in Nigeria or Africa as a whole to a foreign LP and trying to explain why they should put capital in this market. And so we're talking to your LPs. What are they, I mean, are they, and I know Andrew Ali has said this, you know, like, the thesis that we hear is that because Africa is higher risk, it'll give you higher returns. And Andrew has said, you know what? I don't want the risk and the unpredictability. Give me 2 to 3% consistent compounded annual returns. I will take lower risk. I'm not coming to Africa.
So let me answer this when founders, when you're looking for money, you need to, first of all, do your desk diligence around who are the investors that are interested in my space. So that's always my starting point. So you first of all go to the investors that already have decided that with everything they know, they want to be in Africa.
So, but are there LPs with that perspective? I guess the DFIDs,
the DFIs primarily have that perspective. They have a mandate, and that's what they're going after. But there are also we have non-DFIs in our investment group.
And what is that? What
they also have. First of all, you know, I said earlier that our investors share our philosophy around making it possible for everyday folk to reach their full potential by having access to essential services. So they've started off with that premise, and then where growth is going to be. And everybody knows that, you know, by 2050, it's a huge consumer to be in high. They say, looking where the puck's going, and people can already see that direction of travel. In the demography benefits and dividends, knowing the size of the market, knowing where the preponderance of the youth population, global youth population is, knowing all those good things, what do we need to do to bulletproof our investments? And that's why with each investment we go in, we're doing a risk assessment by space.
Gotcha. Okay, so let's speak specifically about the crisis in this portfolio and your portfolio, sort of COVID affecting it. So
interjection of tech into some of these boring businesses to serve their existing clients, but see that technology brings, and that's in boring, like I said, it's in catering, it's in healthcare, it's in education, all these essential services. We're seeing that happen.
Okay, are those companies? I mean, are they ready? Are they investment ready? Are they scaled up? Because you're talking about catering.
My God,
like,
do you know how much? Do you know how much cash goes through these food businesses that traditionally were supplying these large events, but have now pivoted to the kinds of businesses that you have in the West, like Mindful Chef, where you have recipe boxes. So there's that pivoting going on, and people who are having these large events are still have now realized that, okay, actually, even if I'm having my event over Zoom, I can get thousands of meals distributed to my guests. So these businesses are cash businesses.
Okay.
If when you put tech on them, it's like you're putting them on wheels. Like, forget about wheels. You're putting them on a jumbo jet.
Gotcha.
To take off even further. So I'm not talking about struggling small roadside businesses. I'm talking about scalable businesses, large cash businesses that have ignored the ability for tech to transform them until we got to this point.
That's fascinating. That's really, really interesting. And so in making that transition, then they've got to build in logistics, they've got to build out a technology stack that allows them to sort of serve customers.
They have to have a more robust central kitchen, so, and these businesses are there.
And you're finding people who are ready to make that transition, who are ready to build out the team and the executional capacity.
They're not necessarily bringing in the tech team into
the business,
but they're leveraging tech. And for us, again, food business is where women are, and it interests us to have that nexus. And this is about, again, creating those transactions.
Really, really interesting. I'm going to start to jump into the Q&A. There's some interesting questions already. But I really do like that last point. That's really, really interesting sort of thing. So I have a question from Ayla Bawon Obiocha, and it's about how Alitheia is working to increase participation of women in the VC fund management space.
Well, what I can say is that as a firm, to have more, it's a pipeline. So you have to make sure you have more women in the pipeline. In my firm, where overwhelmingly the balance tips towards women, and we create an environment where women can stay and feel comfortable staying, even during those times that other firms might find difficult to keep them on, their childbearing years and other things that impact on a woman's willingness to stay in a high activity, high octane sector like private equity. So we create that environment, so we create the pipeline for that. So that's in my firm. But even as in an industry, I'm the chair of the Africa Venture Capital Association. We are looking at how the association can help more general partners become more able to fundraise. And part of that is looking at the diversity of teams. What do teams need to do to be better, to be able to present the opportunities better, to be more attractive with their strategies, and to create robust teams.
Okay, interesting. I have a question from Gavin Young around investments and funding aside, what are good entities to work with when considering expanding fintech solutions into Africa beyond Nigeria? What would you advise on the process?
What do you mean? What does he mean by that? What's the investment and funding aside?
Let's see. You know what? Let me see if I can get Gavin on here. Gavin, I'm going to see if I can get you to expand on this question because I see you have another one as well. So let's see if we can bring you on live. Landry, can you see if we can get Gavin on live? So we'll see if we can get Gavin to come on and actually ask his question so he can clarify it. Another question that's a little bit strange in the way it's framed. Are there reasons why you choose to invest very early in some firms and then choose to wait until other firms have 3 years of operations before you invest?
Yeah, there are. And in fact, companies like Paga and Lydia, we invested much earlier than we would in other businesses because they were creating a space.
Okay.
And we saw the value of that space. And we saw, and that the value of that space was aligned with our drive for financial inclusion.
Okay, gotcha. Okay, so Gavin is here. Let's see if we can unmute him and he can speak to his questions. He's got a couple of them. Hi, Gavin.
Hi, Tamiwa. How are you? Hi, Tokunboh. Thank you so much.
Hi, Gavin.
Really appreciate it. Thank you. Maybe just that one question just to elaborate it. But what I was saying is really funding aside. So obviously funding is a big focus for a business in order to expand it and many of the things that you said. But apart from that, in terms of just getting that business into Africa, in terms of realizing the opportunity. So let's just say it's a fintech business. In terms of realizing the opportunity, when you realize that you have a solution, you have a business, a little business, if you like, a product, whatever it is, that you can expand into Africa, and there is a need, you've done your due diligence a bit, etc. But it's really taking that into Africa with or without financing. But let's say obviously financing will come into that, but it's more creating the opportunity for that business. Many of the businesses that you mentioned as well in the spaces you mentioned.
Yeah. So with any new markets, we tend to start out thinking about partners. Interestingly, one of our portfolio companies is actually looking to, well, 2 of them actually have looked to expand beyond Africa. And it's the same process. Who are the partners who are on the ground? And that could start from us making introductions within the sector, because we have those introductions from partners that we work with, whether other advisors, whether that's law firms, financial advisors, or even banks. And so it starts with who can we, first of all, who's the partner on the ground? Sometimes that's a business, sometimes that's an experienced professional who has experience of other markets or experience of that sector that we can bring to the table. So I think earlier when I said, we don't just bring capital, we bring access to talents in our network, we bring access to other financiers in our network, and invariably those people in our network also have people in their network that we can reach out to. So very quickly, we find that it's less than 2 degrees of separation to get to a key resource that can help us in a new market. Does that answer your question, Gavin?
Yes, Tokunboh, thank you very much. So they'll certainly go hand in hand, and you offer the services as well as part of the bigger picture. Thank you so much.
Yeah.
Okay. There's just one more question Gavin had, which was, if you have multiple solutions, how do you ring fence a particular solution to make that one investable? So you're a company, you've got multiple products or multiple solutions. Is it possible to spin off one of them or a specific one?
Yeah, so first of all, we never want to be an investor in a one product company. So it might be a platform that can be leveraged with different use cases. And invariably what you'll find is that if there is a portfolio of products, they're probably related somewhat, and you decide, which one is the beachhead, that you want to go to market with. And so some of that might involve testing, some of that might involve, and I mean like user testing, but some of that also might just involve allowing one or two or three to come out together at the same time and see what sticks. But we don't want to be in a mono product company, and we prefer to invest in platform companies, and we generally prioritize for our kinds of businesses, because we're looking to meet essential needs. We're generally thinking, where can we have the biggest bang for our buck in terms of impact? You know, where is there the greatest need? We're trying to solve intractable problems, and so which of these products immediately brings succor to the problem that we're trying to solve?
Fantastic. So I have a question here, Ademola Iola. You're talking about being able to more quickly identify female-centric opportunities and products. I think we've talked a little bit about this, but he or she is saying, what other female-centric products or services need optimizing that you think of? Are there gaps that could still be filled in terms of creating products and services? I mean, we know there are gaps. So I suppose
there are gaps. I mean, even if you just take traditional, a traditional sector like health. I mean, we still have high infant mortality in Nigeria.
Yeah.
Why is that? How do we improve the health sector? What transaction do we need to create to make sure that a hospital or clinic or primary carer can help prevent that mortality? So just on that alone, I was speaking to a company a couple of days ago that's looking in healthcare around cancers, and breast cancer is still the biggest type of cancer. How do we improve the ability to detect that and treat that? And some of that leverages technology and still needs devices, but not everybody can get to these big room occupied devices. So what innovation needs to happen in that area? So there are gaps.
Okay. I think it's really important for anyone in the audience to pay attention, I think, specifically to how specific this thesis is. What are the things that affect people on a day-to-day basis? What are sort of like core problems for man and woman on the street? Those are the things that they're looking to solve for. So I think if you're going to present something to Alitheia, you might want to keep that in mind. I've got a really interesting question here from Alberto Anton Aparici. I want you to speak about a failed investment. What were the challenges and problems that made the company fail? Were they risks that you had valued during the due diligence? I'd love to hear this.
So I haven't had any write-offs.
Okay, all right.
I haven't written anything off.
That's wow.
Yeah. So
that's impressive. That impressive is that good? Because there's if you're not having some.
That doesn't mean there haven't been challenges that have been overcome or have been overcome. I'm just saying I haven't written anything down to zero. And maybe that's why sometimes you just need to just put all hands on deck. How do we solve problems? Yeah, I mean, one of the areas that stands out for me today is around investing in subsidiaries as opposed to where the main decisions are made. That's an area where I felt that I probably would not be doing that again.
Sorry, say that again, please. I'm not sure I quite got that.
If you have a group of companies and there's a top co and it has subsidiaries, not investing in the top co for me is not something that I would do again.
Okay.
Because there are all kinds of issues. One of them chiefly, which aligns with, who's management is, how do you make sure that the management that you believe you're backing is 100% aligned in the entity that you're backing?
That's fascinating.
So that's an area that Immediately I see those kinds of transactions, I'm like, like I want to sit where the management I'm backing is sitting. And it's an age-old mistake that some financiers have made, and you can get away with it sometimes, and sometimes it just bites you.
Interesting. And so, okay. So would you say, like, in terms of your most that's the issue that you've seen in your most challenging investment?
That's the one that has irked me the most.
Interesting.
Because you're going into it eyes wide open. Like, okay, yeah, I know you're up there and there's a subsidiary, and I know that in addition to this subsidiary, you're working on a number of other things because you have 10 subsidiaries, and I'm just going to invest in just one of them. You kind of like you're not totally aligned going in, so that's a rookie mistake. That's
interesting.
And that I try and avoid.
Okay, all right, fair enough.
Because like I said, management, our top thing is, who am I partnering with? Are we fully aligned? If you're not fully aligned, it's so difficult to have the vector moving in the direction with the greatest propulsion that it should be.
Interesting. This is actually interesting because it kind of segues into another question also from Alberto about identifying local talent at early stage. Now he's taking it into a very topical space, which is there's a lot of funding going to expat founders, which I'm sure you've heard this conversation going on around the Twitter space and all over, and with some articles we've actually written about it as well. And so Albert thinks it's because there's a lack of knowledge about how to identify local talent early. Do you agree with that thesis? Do you disagree with that thesis?
Well, the short answer is that I disagree with that thesis. There are multiple aspects to my thesis on this case. So let's first of all talk about that local talent. There is talent that is local, that has had the opportunity to get an education that's more robust than what's available locally. And those founders have gone away and done their thing. They've paid their dues somewhere. They've had whatever kind of internship that they've needed to gain their experience, and they've come back to start something. But what that education gave them was not just a technical base, but it also gave them an ability to think more broadly and present their solution in a certain way that speaks the language of an investor.
Okay.
So there's that. Then there's a local talent that is very smart, and in spite of all the challenges, is able to start a company and come up with a very good solution. And even though they haven't had that same level of robust education, they've got the nous for the business, they know what they're doing, but they may have lacked that part of the education that enables them to speak the language to present their opportunity in a manner that attracts an investor. So me as an investor, I'm always looking for local talent. And some of the people that come through my door have not had the opportunity to present in a certain way or haven't scaled in a manner that's attractive to me. So I'm never looking at going out there and saying, who are the non-local talents that are doing something? No, I mean, I'm Nigerian, I'm from Ibadan. I want my people to thrive. That's why I'm doing that's why my funds have the thesis that they have. I want ordinary folk to thrive. That's why we look at these key sectors like education. How can it be more robust and better so that we can have this pipeline come through? But if you are presenting something that doesn't fit within my sector or hasn't quite scaled to the level that I can support it, you're not likely to get investment from me. And if you haven't had the track record that convinces me that even though you haven't scaled, you're a good bet. And then there are the non-local founders who have had that track record elsewhere, maybe built a business elsewhere and are now replicating that locally and have scaled. And I'm like, okay, yeah, you're
I mean, I suspect a
ticking the
pushback.
box.
I
Yes,
suspect a pushback, and if you allow me to
yes,
definitely share
please.
that some of these investors, some of these founders who are, receiving funding, building businesses here, don't necessarily have much more, impressive
I'm not
background.
saying that all of them do, but I'm saying that where I have invested in a non-local investor, it is because that founder is meeting a need in a sector that I want to address and has the track record somewhere else. That's where I've made those investments. Where I have not backed a local founder, it's not because they're local, it's because their opportunity doesn't meet my needs, etc., etc. But so that's why I disagree with the thesis. It's not that there's an inability to find local talent. There's an inability to find local talent that is working on something that's scalable within the requirements of what I'm looking for.
I think something important to mention is a lot of these concerns aren't necessarily about an individual investor like yourself. They are about the conversations around systemic bias or sort of systemic incentives, that lend to foreign.
But systems are made up of individual cases, right? So I'm starting out with my case, and I have many colleagues in the industry who I know are looking for good businesses run by good,
local
experienced talent. So I don't know any of my colleagues, and when I say my colleagues now, I'm particularly focusing on African-based local fund managers, African-based local fund managers whose provenance is from the continent, people that look like me.
You have answered question B, not question A, because that narrows this question down.
I'm just
so dramatically.
But there's a reason I'm narrowing to that first. Because
let's hear it.
That group, I don't know any of that group that is sitting there going, who are the non-local founders that I can back? So that's
let me ask you
a
question.
Well, let me finish. Let me finish because I'm going somewhere with this.
All right.
Now, in the broader group that are not investors that look like me, who are not necessarily locally based, if they want to fund certain founders because they have the money to fund those founders because those founders give them more comfort, so be it. What we need to do as Africans is find more domestic capital being put towards our problems. We need to stop looking for capital that's coming from elsewhere solely to solve our problems. If we had more domestic capital being put behind more fund managers that look like me, perhaps we wouldn't have the same thought. So let's be introspective first. Think about how we have more domestic capital. Think about we make more investments in our educational infrastructure to make it possible for more people to have the right sorts of skills and experience, internship and apprenticeship to be able to be deemed and run companies that to invest.
I think that's a great perspective, and I thank you for bringing it down that way. I think it's a perspective that I think the conversation has come to in the public space a little bit, which is where's your local capital? And if people who sit elsewhere are giving money to people that they're more comfortable with because they share cultural values or perspectives,
or they see more experience that they understand better than the experience they're meeting on the ground.
You put your own capital up or shut up, basically.
I didn't say shut up. I didn't say shut up. Put your own capital up and improve the situation.
Okay, fair enough. Interesting. So that brings us to a related question. Onu Ocholi, hi Onu. How do you think about aiding the upskilling and capability so that these potentially investable businesses, no, sorry, let me read that question out again. How do you think about aiding the upskilling and capability investment so that sort of potentially investable businesses get better or gets to investment stage, I guess? Do you actively go in with the operational team or do you link them with others, basically?
So is this post-STAR investments that we're talking about here?
No, that's
because post-STAR investment, we sit down with management, you know, we're actually before our investment, where are your gaps? When we come in, where are the areas that we want to help you address? Thinking about strategy, we provide that from a board perspective, and we make introductions to resources that can help execute where there's a gap. So again, we're not just providing finance, we're providing all these other elements too, because we're partnering with you to grow your business and make it better. Okay. So is the question about the pipeline of opportunities that don't meet our criteria and how those are supported to where they...
He says he was thinking about pre-investment, given how many businesses need help to get to an investable stage, basically. Mm-hmm. Yeah.
Well, I mean, so we can't do everything. Is my first. So we're making investments, but also typically I don't support a firm like us as an investor helping you sort of recreate or shape your business plan or what have you before you've gotten an approval from us to help you get an approval from us. Because if we do that, and then you don't get an approval, you're like, well, you wrote this, why aren't you approving it? So what I give people pointers. I give, when we turn people down, we like to turn people down graciously and to help them see where they don't fit with our criteria. And hopefully they can take what we've given them, that feedback, to someone who can help them think through the next stage of their business to enable them reach the level where they can meet our criteria.
Fantastic. Let me broaden that question a little bit to sort of a broad ecosystem development question and say, are there specific skills that you would say you see constantly missing in founders and executives of businesses? Is there like a toolkit or, 3 things that you would say, look, I see these problems consistently. If you are starting a company, you need to go and book up on these or study up on these or get tougher on this fronts?
No founder is exactly the same as the other. They're not robots, so there's no sort of wire connected somewhere that we have to keep on reconnecting. But one thing I do say is that we any kind of apprenticeship or internship that you can gain in your sector, and I'm all for people of uni, and that's not the typical path for everybody. So sometimes you do have to get better internship, which helps you. All those skills, when you wake up every day, you're thinking, what skill am I adding into my toolbox today? What am I doing to make myself better, to prepare me better to be a founder? I mean, I think that's the best I can say that, because there's no one type of founder, but in your space, get the skills and experience and knowledge that will set you apart. I was speaking to a founder the other day, first time I was speaking to him, and just based on how he was talking knowledgeably about his sector, his company, the problems and the solution. I hadn't even seen a piece of paper. I was thinking, you know what, I like this guy. I would give this guy more time to see what he's proposing.
Gotcha.
So, yeah.
Okay. I mean, this is just the last skill-related question from Nubi K. Are there any traits and skills in entrepreneurs in your portfolio that have lent themselves to thriving against all the odds? So have you
can do flexibility, adaptability, because especially if you're operating in Nigeria, it's like you're in a Dodgem car. You have to have your wits about you, and you have to the humility to recognize that you don't have all the answers, and recognize that plan A is not the only plan you're going to have, but be able to pivot and be systems thinking in developing solutions, and not just be tunnel driven down your own way and solutions, but being broad-based and transparent, to be able to convene ideas and be open to that. I think all those, I find those enable the best of our entrepreneurs to get on even in the face of challenges.
Okay. All right, so shifting a bit, someone wants to know how you look towards long-haul logistics and the fintech ecosystem during COVID. That's a strange question.
Well, fintech is easy, and I've mentioned about Paga. I mean, the ability to be able to still transact when you can't exchange cash physically.
What kind of impact have they seen on their business over this period?
It's been positive. There's been an uptick in transactions through the platform.
Okay, no, but not a Zoom, 10x volume,
It's been positive.
Aha, very diplomatic. Okay. Let's see what else. Oh, what's interesting here? So here about having played in the space, I guess it's still about founders and talent. What would you say has been the single most interesting thing you've discovered about solid founding teams? That's been shocking to you. Interesting or shocking? Interesting or shocking? Take your pick.
Well, teams, have a team.
All right.
Have a team. Don't be a sole founder thinking you can do everything. Don't ignore the benefit of walking the road with others in a team of people who are of similar experience. It helps in the downtimes. They say if you want to go fast, go alone. If you want to go far,
go together.
Go together.
Fair enough. All right, so same question from the same person, Damilare Ogunleye. Another question from the same person. How early did you come to Paga and Lydia, which you've already spoken about? And even though you said they were building a base, what allowed you to change your thesis for these ventures? Has your thesis changed for these ventures?
No, not really. Our thesis hasn't changed. What I will say is that when at least one of them first came to us, they match our initial criteria, but I could see how their platform could be a tool for our agenda. And so, working with the founder to sort of twist his thinking a little bit and reorient to align was something that we needed to do.
Let me ask a question about, say, Paga specifically. I mean, Paga started in a landscape that's very different than the fintech landscape today. I say this of the big fintechs that came, and the banks, the fintechs that came, of this thing. And I sometimes wonder, are they solving problems that previous companies should have solved? InterSwitch had done base space, and the other players that have come into that space, basically. Are there opportunities that they should have owned? Or have they been focused on one thing and that thing is the thing they should be on? What's your thinking about it? I don't know if my question is super clear.
Yeah, well, I mean, they didn't let's say they're doing more than when we first came into the business. They've broadened, they've pivoted in some areas, they've introduced some products and services in others. But the key theme of addressing financial inclusion, broadening access to finance still remains.
Okay, fair enough. And so your sense is that is the mission, and that's the mission that should be focused on.
But you know, in dealing with that mission, it's enabled them to be robust for a broader group of consumers. They talk about unbanked consumers, but in addressing the needs of the unbanked, they have also been valuable for the banked.
Yeah. You know, that there's a really interesting conversation going on about banked and unbanked and sort of financial inclusion, and whether financial inclusion is where our energy should be, or if it's just customers that don't have enough money to be very financially or robustly.
So we talk about unbanked and underbanked. That's what we talk about, you know. So the underbanked, you know, are people who have bank accounts, have access to finance, but don't have access to a robust set of financial products and services, be that insurance and the different types of insurance, or mortgages and different types of mortgages. So how do you broaden the basket of services and products for that group? And how do you even bring those that don't even have bank accounts into that ecosystem so that they can reach their full potential by having access to finance to live their lives, build their businesses?
Gotcha. Okay. It looks like we are out of time for this, but this has been a fascinating and very, very useful session. I'm going to bring it to a close, but I want to say thank you very much for taking the time and for answering some of the more interesting questions that we've thrown at you.
None of your questions were boring.
That's good. We aim.
When you say for answering some of the more interesting, there were no boring questions.
Fantastic. Thank you very much. There's a poll for the audience. There's a poll about this session. Please fill it out. It'll help us do more interesting sessions. I am going to absolutely murder this person's name. Our next session is on August 7th with Malunzi Kisara, and Malunzi is the country manager at A1 Miles, which is a tech-enabled transport company. So the next session is State of Tech in Uganda. So that should be interesting. Please join us for that. Thank you once again, Tokunboh, for joining us. And thank you, everybody, for joining us.
Thank you for having me.
Please join us for the sessions. We will put out the material from this session on Twitter, on our website, our YouTube channel. So subscribe to any and all of those, and to our newsletter if you haven't. The newsletter URL is on screen right now. But thank you very much, Tokunboh. Thank you, everyone.
Take care. Bye.